Hi traders and welcome to the Technical Analysis Market Watch on Friday the 10th of March. So I've certainly seen some good action this week in the currencies and the indices, and yeah, definitely some key zones broken. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and you can see we've had the big break of that very important zone. That 67.30 area got broken, and once that did, it basically free fell all the way down to that 65.80 area. Now, look, there's not a lot really holding it here. I mean, apart from this little bit of support at this point here, that's all we can really find for it at this level. So in reality, it's probably just taking a little bit of a pause. It has had two attempts at actually going up. You can see here, two decent attempts at getting back up into the 66 sort of 30 area, failed both times and has ended up on the lows again, nearly 50 pips lower. So although it doesn't look like a lot, that is actually two candles of pretty significant moves. It's they're 50 pip moves right through there, and it has ended up, you know, basically where it started. So it doesn't bode very well for any long opportunities there. And I think that 65-cent mark is really calling. 65.20 in particular is a pretty good option, I think, for the short. I would be waiting for a break of this level. The minute we get even a smaller break on a 1 hour or a 4 hour chart, that would be all that is required for this. And then I'd be probably looking for a short opportunity. Scalp just down to this level. Look, it's a very strong level here. Like, there's no worries about that. We know that it's been very strong resistance right through this area here. But now, you know, we've got a 20 and 50 moving average cross, obviously. The momentum is well and truly down. We've got the series of lower highs and lower lows. There's no question we're in a very strong downtrend. And yeah, in reality, yeah, it's really not much of a stretch to actually think it can get down here to the next real level of support. At the moment, it's in the middle of, effectively nowhere apart from one touch. So I'm not overly, confident this level is going to hold up. And the two attempts at moving up so far have failed. So the only way I would trade this up is if we actually get a daily close, and it would take a daily close above the 66.30. If it does that and manages to hold up a lot, above that level, then I'd be looking for a move up to that 67.20 area, and the 20 moving average will have a chance to catch up. So there'll be very strong resistance to that point, but it's a reasonable scalping opportunity up to that level. But it must have a daily close above the 66.30 before I would get interested in that. A close below the 65.70 area here, even on a 1 hour or a 4 hour, and I'd be looking at shorting opportunities down to the 65 cents, but pretty good trading on the Aussie. All right, we'll move over to the US dollar CAD now, and yeah, this one's just been very strong, obviously. Once it bounced through, broke that resistance, didn't even come back and test it. So yeah, probably a difficult one to get into, but when you see this and the candle is so strong, and even the next one is looking strong, what you need to do is go to the smaller time frames to look for the opportunities to get in on those. So realistically, you have to go through, have a look at the opportunity. This is the break. We know this is the break zone here. Okay, once it did this and pulled back to a 20 moving average and it was looking so strong, this was your opportunity to potentially move up to the next level. The 138.50 is the target. It hasn't quite reached it yet, but it is looking fairly strong, for that move. So realistically, in order for this to go short now, you need to be breaking below the 137 sort of 50 area with a 1 hour time frame. If it does that, then you could potentially look at opportunities down to the 136.80 to 136.50 area. But I don't really like trading against momentum when it's so strong, and you can see very clearly on the daily that it's a lot of momentum pushing up. Okay, so very strong. So realistically, if we get a break above the 138.50, again, it'd be one of those ones where you've got very strong resistance right in front of you. So you'd be mindful of taking it on the first hit. You wouldn't want to be jumping in straight up because you've got very big heavy resistance here that's sold it off a couple of times. But in saying that, if it breaks through, test it from above, and then we get that rounding bottom, on a 1 hour or 4 hour change of trend, you see a series of high highs and higher lows from above it. Very different story then, okay? Then we're looking at a totally different trade. But look, moving average crossover, we know that's very strong. MACD is rising. Really, the power is with the upside. So I'd be looking for pullbacks to the 20 moving average on the 1 hour, and then trading it up. It's probably the best way to trade the CAD at the moment. Over to the US dollar yen now, and look, it basically hit the target we were looking for. Look, it got to that 138 level, as you can see. Only just touched it, but it has sold off now a little bit, forming a little bit of an evening star at that point. But look, we know the dollar-based pairs are pretty strong. I mean, we just saw the CAD This one hasn't been as strong, but it has been consistently strong right through. You can see we've had a series of higher highs and higher lows all the way up, and ever since we broke that downward channel. So really, yeah, what we're sort of looking at here is an opportunity to maybe trade it off the 20 moving average. I think if we get a pull back down to around that sort of 135.50 area and the 20 moving average catches up, it might not be a bad landing point for it, and we look for a reversal from there. It's not a bad zone. I mean, you can see there's quite a bit of, pop a line there. You can see that there's actually quite a bit of support at this level and resistance. So it is actually a role reversal zone in itself, and the 20 moving average just bolsters it. So if we get a bit of a change of trend from here, I wouldn't automatically long here though. I'd certainly wait for a change of trend. I'd go to a 1 hour, wait for a change of trend, series of higher highs and higher lows off this level. And in the first instance, aim back up for the 138. That's the easy money. And then after that, we basically wait for it to break through and then look for longs up to the 142. But in my mind, it's got to break that level first and then retest it before I'd get excited about that. I think the more lucrative trade is to long it from this level here if we get that change of trend. If, of course, the daily breaks through and breaks all moving averages, and it needs to break all of them for me to take this short, it needs to get down to that 133.80 really. If it doesn't close down below there, not interested in shorting this at all, because I think there's just too much strength and you don't want to be trading that heavily against the prevailing trend. Okay, so pretty good trading on the yen though, if we do get around this level, because I think there's a pretty reasonable move up to the 138 without a lot of resistance right in front of us. Okay, over to the dollar index. This has been playing the game as well. Pull back to the 20 moving average and 50 moving average. You know that when we get the both moving averages as the support base, it's double confirmation. We love that. As you know, we've got a series of high highs and higher lows. Of course, it's playing the game really nicely. Hit the resistance level that we expected it would. It's a very, very strong level, the 105. So no real surprise there to see it reject a little bit off there, but it's still looking fairly strong. You've got to trade it with a little bit of trepidation now. Because it has hit the level that we would have been aiming for, right through from this point. It's a reasonable move, 100 points on this. Obviously, the euro is the one we're going to trade. We'll have a look at that in a second. But good move. It's done everything that we needed it to do, but it is still looking fairly strong. Okay, so be very, very mindful of that. The euro, of course, is the beneficiary trade. We'll go to the euro now, and you can see that the support level is the same as the resistance level on the dollar index. This one's got a lot in front of it though. Look, it's got a 20 and a 50 moving average to go long. It's got a lot of work to do before it breaks long. But in saying that, there is support here and a significant support at that. We've got a very strong round number, very strong support and resistance right through here. And we've also got a 200 moving average that you can't even see there because it's buried behind the support line. But it is there, make no mistake. So look, realistically, it needs to break this level before we start looking at shorts, okay? It's already, the party's over for the short, the easy short, because it's already hit there. But if we get a daily close below the 105 and it starts to move down, the next real level for this is about the 102.80 to 103 level. So there's a couple of hundred pips here for up for grabs, that's for sure. So realistically, if we get a daily break though, so we get a daily break below the 105, we look for pullbacks on the 1 hour on the way down and look for a shorting opportunity down to that 103 or 102.80. That whole zone is a pretty good take profit. Okay, so if you're looking for longs and you're looking for potential counter trend, up to the 20 moving average makes the most sense. Okay, both of them are cross lining here, but the 20 moving average and 50 moving average resistance is going to prove fairly strong. And if it gets there fairly quickly, the 106.50 is a very strong level, as you can see. So realistically, this is the level that we'd be aiming for a scalping long. But again, it's very strong support. So if you want to scalp it, this is the zone. Up from 105 up to 106.50, that's your 150 pips that you need to be running with for the scalping opportunities. And if we get a daily break below the 105, then we start to target the bigger move. And I think it needs to be a daily close though to really justify that. Okay. And over to the US 500, big sell-off last night, as you can see. Look, no real surprise here. I mean, look, it hit the, it did everything that we needed to do. I mean, at the end of the day, this is proving to be a technical bonanza. It's been technically trading for months and months now. So hopefully you've been able to capture this because it's been pretty easy. You can see here that we had the evening star set up at a point of resistance. The star is right at the resistance point. Very, very strong resistance there. As you can see, the 40.80, we've been talking about it for ages, right through there, all the way through here. So no real surprise there. Well and truly broken through the moving averages. We're about to get a 2050 moving average cross, and it's sold off all the way down to the support level where you'd expect it. Okay, so the 3900 is going to be the level where you would expect it to go. We've been talking about it for a while now. That's the level. It's hit now. it's really do or die time for it. It either finds support here at 3,900 and bounces back up to the 4,000, which is going to be the 20 moving average as well if it happens in a timely manner. And if it does that, then we're all good for potential resell from that level. So if you're going to scalp it, you scalp it from this level here up to the moving averages, but only do that if you get a series of higher highs and higher lows on a smaller time frame. If you don't get that, I wouldn't be touching long on this, but it is at support. So if it's going to go long, it's going to go long from here. If we get a daily close below 3,900 and Monday morning we're trading below 3,900 on a daily and it's closed down there, I'd be starting to look for targets down to 3,800 because that's the next very logical zone and a very strong level of support. All right, so I hope everyone's had a great week's trading. We've had some great opportunities. All of our levels have held up again, and hopefully you've been able to capture some of those big moves. Have a great weekend. I look forward to seeing you all next week.